Have you ever thought about how different investing feels today compared to just 10 or 20 years ago? Back then, people talked mostly about stocks and real estate, simple ideas handed down from one generation to the next. But with technology evolving so fast, the way people will invest money by 2030 is shaping up to look completely different. In this video, we're not just talking about tomorrow's trends. We're imagining what investing might look like when AI, automation, digital assets, and new financial platforms are everywhere. This isn't about a crystal ball or wild predictions. It's about the realistic ways people could be making smarter, more efficient, and more meaningful investment decisions in just a few years. Before we start, if you enjoy forward-thinking finance and grounded discussions about the future of money, take a moment to like this video, subscribe to the channel, and turn on the bell so you don't miss future insights like this. AI-powered investment platforms will run the show. Imagine having a financial advisor that never sleeps, analyzes millions of data points in seconds, and personalizes everything just for you. That's what AI-powered platforms are becoming. By 2030, most people won't be picking stocks themselves or even relying on traditional financial advisors for basic decisions. Instead, AI algorithms will do the heavy lifting. These platforms will study your spending habits, risk tolerance, financial goals, and even current market trends to automatically adjust your portfolio. It's like having a genius money manager in your pocket, available 24/7. The best part? These services will be accessible to everyone, not just the wealthy. You won't need millions in the bank to get expert-level investment advice anymore. Fractional investing will be everywhere. Remember when you needed thousands of dollars to invest in real estate or buy expensive stocks? Those days are ending fast. Fractional investing lets you own a piece of almost anything: a luxury apartment in Manhattan, a Picasso painting, or shares of high-priced stocks, with just a few dollars. By 2030, this will be the norm. Regular people will build diverse portfolios that include real estate, art, collectibles, and premium stocks that were once out of reach. Investment apps will let you buy fractions of assets as easily as ordering food online. This democratization of investing means your neighbor could own a slice of the beachfront property in Miami, a portion of a rare baseball card, and fractional shares of top companies, all with a modest budget. Crypto and digital assets will be mainstream. Let's be real, cryptocurrency isn't going anywhere. By 2030, digital assets will be a standard part of most investment portfolios. Bitcoin, Ethereum, and other established cryptocurrencies will sit alongside traditional investments like stocks and bonds. But it goes beyond just crypto. We're talking about tokenized assets. Everything from real estate to company shares being represented as digital tokens on blockchain networks. This makes buying, selling, and trading assets incredibly fast and efficient. Central banks around the world are also developing digital currencies, which will further legitimize the space. The Wild West days of crypto will be behind us, replaced by clear regulations and institutional adoption. Your retirement account in 2030 might include a healthy percentage of digital assets, and that'll be completely normal. Sustainable and impact investing will dominate. People aren't just asking, "How much can I make?" anymore. They're asking, "What impact am I making?" By 2030, sustainable investing won't be a niche, it'll be mainstream. Investors, especially younger generations, want their money to support companies that care about the environment, social justice, and ethical business practices. Investment platforms will make it easy to filter options based on your values. Want to invest only in companies with strong environmental records? Done. Prefer businesses with diverse leadership and fair labor practices? No problem. The financial industry is responding because they have to. Companies with poor environmental or social records will struggle to attract investment capital. So if you're putting money into sustainable funds today, you're ahead of the curve. By 2030, this won't be optional, it'll be expected. Personalized micro portfolios based on your life. Here's something exciting. Investments will become hyper-personalized. By 2030, platforms will create custom portfolios based on your specific life stage, goals, and even daily habits. Planning to buy a house in 3 years? Your portfolio will automatically shift to lower-risk investments as you get closer. Saving for your kids' education? The algorithm adjusts. Even things like your shopping patterns or career changes will factor in. This level of customization means you're not stuck with generic investment plans anymore. Everyone's financial journey is different, and technology will finally respect that. You'll have a portfolio that feels like it was designed specifically for you, because it was. Real-time trading and instant access. The days of waiting for markets to open or dealing with slow trading processes are coming to an end. By 2030, you'll have instant access to global markets 24/7. Thanks to blockchain technology and decentralized exchanges, trading assets in real time, without traditional middlemen, will become the norm. Imagine this. You want to buy shares of a Japanese company at 3 in the morning, or sell a portion of real estate tokens in seconds instead of waiting weeks. That kind of instant accessibility will make markets far more dynamic and responsive, giving individual investors a level of control that was previously reserved for institutional players. Of course, with this power comes responsibility. You'll need to stay informed and make thoughtful decisions, because the ability to act instantly also means the markets can move quickly. But the biggest shift is that the barrier between you and global investment opportunities will almost disappear. Your access to international stocks, real estate, and other assets will be seamless, putting the world's financial markets literally at your fingertips like never before. Robo-advisors will become super sophisticated. Robo-advisors already exist today, but by 2030, they'll be on a completely different level. Right now, they're mostly basic algorithms that manage portfolios and rebalance investments. In the future, they'll become sophisticated financial assistants that understand not just your money, but your entire financial life. These next-gen systems will factor in your emotions during market volatility, helping prevent panic selling or impulsive decisions. They'll constantly remind you of your long-term goals and keep you on track, even when markets are unpredictable. Some will leverage behavioral psychology, guiding you towards smarter financial choices based on how humans actually behave under stress or temptation. Others will integrate with your smart home devices and lifestyle data, understanding your spending habits, income patterns, and upcoming life events, and then adjusting recommendations accordingly. They might suggest saving more when a big expense is coming, or reallocating investments when your risk tolerance changes. The human touch in financial planning won't disappear entirely, especially for complex situations or personalized advice. But for everyday investing and wealth management, these advanced robo-advisors will become the go-to resource for most people. They'll make investing easier, more intelligent, and far more personalized than anything we have today. Community and social investing will grow. Investing is becoming more social and community-driven, and by 2030, it's going to look a lot like social media, but for your money. Imagine being able to see what successful investors in your network are doing, learn from their strategies, and even join digital investment clubs where people share insights, discuss market trends, and support each other's decisions. This social aspect has huge benefits, especially for beginners. Investing can feel intimidating, but when you're part of a community, it's easier to learn, ask questions, and build confidence. You also get accountability. When others see your activity and share theirs, you're more likely to stay consistent and make thoughtful decisions. Some platforms are taking it even further. They'll allow groups of friends or community members to pool money together, giving access to larger investment opportunities that would be impossible individually, like co-investing in real estate, private companies, or other high-value assets. By combining resources and knowledge, investors can tackle bigger projects while learning from each other. When you think about how investing might evolve by 2030, it starts to sound less like a high-stakes gamble and more like a blend of strategy, data, and personal goals. The tools, platforms, and even what counts as an investment could be very different, but the core idea stays the same, making your money work for you in the long run. I'd love to know what you think. When you picture your own financial future, does it look more tech-driven, more strategic, or something completely unexpected? Drop your thoughts down in the comments. The conversation there is always interesting to read. If this video helped you expand the way you think about money and the future, don't forget to like, subscribe, and share it with someone who's curious about where investing is headed. Thanks for watching, and I'll see you in the next one.